It's about that time of day again. Welcome back, welcome back. Joseph James here from School of Trade. I got Marty Errico from Traders Audio. Welcome back to our 7:30 a.m. crude oil morning prep. We're going from the screen to the floor this morning. I'm here in Los Angeles in a comfortable home office. I've got Marty Errico braving the elements on the NYMEX exchange. Marty's going to be telling us a little bit about what he sees from the floor this morning. And I'm going to start this morning with a technical analysis and a top-down approach. I'm going to begin analyzing dailies, hourlies. I'm going to drill it all the way down to the London and the overnight trading session and look for those high percentage trading opportunities that are arriving at 8 a.m. My job as an intraday trader using technical analysis is to find the highest percentage trades right at the open. And I'm excited to share those with you here this morning. And as always, once I'm done, we're going to head over to Marty. He's got his feet on the ground at the NYMEX exchange. He's at the pulse of crude oil futures this morning. He'll be talking about crude, natty gas, be talking about some of the important things he's seeing directly from the trading floor. Without any further delay, let's head right back over. Get started here. I'm going to get started first with a daily chart this morning. Daily charts are great because they're going to help us paint the picture of what is actually going on here. And we talked about this last night on the blog. This was actually a very big clue in the daily charts. Now remember, kids, we don't use dailies to take trades, right? The daily charts just tell us the scenario, right? So think about the daily chart as being the background story. Sorry for the screen flickering here. The daily charts are not used for entries. The daily charts are used to set the stage, right? To set the stone. We know here this morning, as I zoom in on the daily candles, right? Each one of these candlesticks represents one day. We can see right away here, this set of candles right here, we've got a very narrow range. And then all of a sudden, yesterday, Wednesday's candle, this big green candle, right, is the breakout candle. Now the breakout candle, nice big, full-bodied green candle. On the blog last night, if you were reading our newsletter last night, we talked about how, whoa, this is a huge bullish clue. We would expect to see prices rising up into 97. But then we come in this morning and what do we see has happened? Just like that, price has reversed and we see an equal daily candle, big bullish candle followed by a huge bearish candle. What does this tell us? This tells us that all the hard work that those buyers did yesterday, and if you were trading crude yesterday, boy, did they work hard. Yesterday, it felt like every inch that they were able to grab with new higher highs, they had to struggle for. And this morning comes in and just wipes it right back out. So the London session overnight, we can already tell, has wiped out all of those, what we saw to be very, very well-earned prices moving higher. Those buyers really had to work for it. So what does that tell us? If it took all that effort to push price higher, and then overnight it just slides right back down, that continues to reinforce this idea that we have a very two-sided market personality. Now you're probably saying, didn't we hear this on Monday, Tuesday? You're absolutely right. We've had sideways ranges, two-sided personality all week. Guys, it doesn't look like this is changing. So what we have to be aware of is that the technicals now are beginning to tell a story. And that story is beginning to match up with the news events that we're seeing. What did we see last week? Last week we had non-farm payrolls, right? Last week we had the FOMC announcement. We had a bunch of volatility last week. This week, not so much. Not a lot of news events on the calendar this week. So that should be a big, big clue for all the new traders out there. Crude oil is trading from week to week, news event to news event. From my standpoint, if you want my humble opinion, I think there's very little confidence in any long-term direction right now, and therefore the speculators are the ones who are reacting to the major news events, non-farms, FOMC day. We've got jobless claims here this morning at 8:30, so use that. Remember, guys, we want to pick up on these tendencies that we're seeing in these charts. Here's a 4-hour chart, and you can see the same exact thing. Prices are wedging. Right, all that hard work that went into making a new higher high, almost to 97 yesterday, and it pulls right back down. We can see this narrow trading range. We can see the bullish channel here, the long-term bullish channel, but that's not going to give us anything to work with right now. The key component right now is two-sided trading. I'm buying at support. I'm selling at resistance. Most importantly, starting with the 4-hour chart, 97 even, I'm selling that level. 95.38, I'm buying that level. I am very, very cautious here this week. Now that we've seen these fake out breakouts consistently, we know this is probably going to continue through Friday. We now can see buying lows, selling highs. I'm expecting fake out breakouts. I'm expecting that price to try to break to the downside and fail. I'm expecting it to try to go higher and fail. We can't be sure, of course. We can't guarantee anything. So we're going to be watching the personality as it starts to break new higher highs or lower lows. Look at this 60-minute chart. The 60-minute chart shows us just hovering right around this 96 big round number. Guys, we can easily see levels below us here at 95.62, 95.39, levels above us at 96.93. So we, again, continue to see 97 even. 97 even is going to be an excellent sell spot above. And, of course, remember, I'm not selling at 97. I'm waiting for a test of 97, waiting for a failure at 97, and then I'm getting short. Right? We'll be in our trade room today using our entry triggers to get short on those things. Remember, these are just directional clues here. We bounce down to 95.62. Again, we'll test 62s, rattle around the 50s a little bit, and then I'm buying it right back up. This price wedge is screaming at us, be careful. The two-sided trading is screaming at us, fake out, breakout. Buying lows, selling highs. Relatively easy stuff. Let's quickly now take a look at the VIP chart. And then I'm going to toss it back over to Marty here this morning. Relatively easy analysis here today on the overnight session. First things first, a little bit tough to see here, but this is an ideal double top. And double tops in my book are trending strategies. So a double top here, I don't know if you can see that or not, but there's going to be your one top, your bottom right, there's your top right there. There's your double top. Now, I know many of you are saying, double top is a trending what? Yes, I consider double tops to be a trending strategy. When we have a rising prices, I'm looking for double tops. When we have falling prices, I'm looking for double bottoms because I treat a double top as a buying opportunity. I treat double bottoms as a selling opportunity. What do we see right now? We see that double top has resulted in support at 96 even. In the time that I've spent getting logged into this call with you guys, we've just broken below that 96, and we've now gone into, I'm going to move this over here just a little bit, we've now gone into the, there we go, we've now gone into the London reversal zone. So now my London reversal zone, let's take a look at how wide this London session is. London goes from 96.40 down to 95, let's see here, we'll say 96. So we still have plenty of room here. 95.40 is going to be our target here for the sellers. If the sellers are in charge here, 95.40 is our short target here in the short term. Once again, if you're selling here this morning with me, 95.40, that's my short term seller's target. We're going to have to get through the London 618, but halfway down to London 1618, that's my short selling target here today, guys, is going to be that 95.40. We also know we're right inside of that London reversal zone. The London reversal zone is simply a Fibonacci extension above and below London's trading session. London's trading session, of course, in my book, is from 3 a.m. until 7 a.m. And we can see here the range of London's trading session, about $0.50. We can expect this price to continue to move. This is a relatively narrow London trading session. Think of it this way, guys. If we come out of London's trading session at 7 a.m. Eastern Time and we have gone $3 in range, this market will be exhausted and we'll expect to see a price reversal. If this market has moved less than $1, we can expect that to keep going. Okay, think of it that way. London's trading session is extremely important because it's going to set the tone for what we're going to see between 8 o'clock and 9 o'clock. Right now, we've got plenty of room to keep going lower, and I'm going to expect this price to head all the way down to 95.40. I will take a partial profit target. Now, again, we're going to look for a close below London's reversal zone, looking for a close below 95.85. This is the London reversal zone. It's a Fibonacci calculation, and it's something where I am now looking for, since we've had this two-sided trading here, I'm looking for price to go into that reversal zone, stall, give me a close back above London lows, and I'm going to buy these lows and bring it right back up. I will have to use this trend line as a target, but I will be shooting for back to London highs. So again, with that two-sided trading, I'm expecting a fake out breakout here soon. I'm going to look for a potential extension trade down to that 95.40, right? So 95.40, that's my level here for you sellers. What do we got left here? We got about 2.5 minutes left in this candle here. So if we see this 5-minute candle close below 95.85, 95.85, I will be, again, like I said before, I will be aware of that possible fake out breakout. So I'm looking for good market personality, looking for some good speed as we go lower, and looking for a good entry trigger using a wave pattern, getting short below 90, that 95.85. So short sellers are going down to 95.40. I am, of course, like I said earlier, I would rather take this thing right back up because of the two-sided trading we've seen so far this week. So I will be looking for a close back above 95.97, and we'll take that bad boy right back up here to those London highs. On the flip side, if we head outside the range here, again, we'll be looking for the reversal here up front first, but a break above 95.62, that 95.62, that will send me higher here now to the 96.67. Levels above us here, levels above us, once again, London highs, 96.40, looking for a breakout above 96.52 to be bullish. Short-term target, 96.67. Long-term target will be up top at 97.10. I'm going to make sure this post is, this chart is updated on the blog here shortly. That way you'll have the notes here for today. As always, my name is Joseph. Thank you for coming in and watching today. I'm here in Los Angeles. That's my technical analysis and my top-down approach. I am going to remain two-sided today. I will be selling short with this close below 95.84, my short target at 95.40, looking for a reversal at these lows. But like I said earlier, we do have room to keep going lower here this morning. It all has to do with how this candlestick closes around this London 272 at 95.85. Two-sided trading, possibly short to the downside here this morning. That's what I'm looking at. Marty, what are you seeing down there on the floor of the NYMEX? You've got a better vantage point than than here in Los Angeles, I'm sure. What are you seeing, my man?
All righty. Well, good morning to you, JJ. Good morning to you, ladies and gentlemen. And again, JJ's talking about here, guys, the first hour or two of trade here that he's looking at, and kind of seeing similar activity here. Again, right now, off this morning's sentiment so far, we start by looking at a divergence, and we look at a dollar index. We look at our euro currency, and we can see that we have a risk-on sentiment, and definitely that this dollar and euro are definitely attributing to the move here on crude to the downside. So you have to keep in mind this week the reason why we've been trading so hot, higher prices on crude and we topped out overall at 97.20 was because of the geopolitical news that hit the market earlier in the week. The geopolitical news happening over in Israel, in Syria. And now I just got a little bit of a press release out. Now we heard similar activity from America, and now we're seeing similar activity out of Britain. And basically they're saying is there's no evidence that Syria used chemical weapons against their people. There's no evidence, solid evidence out there. So right now, what does that have to do with the market? Well, we're starting to watch a little bit of a fade now coming to the market off those highs. Now, the level that I'm watching that's really most important to me is going to be 95.5, right? 95 even. Those are going to be our two key levels of evidence that we're going to be having to keep an eye on. Now today we get a pit session open below those 95 halves, below 95 even. That would be quite bearish and we'll be fading off these highs. Personally, are we going to get that fade off those highs? I really think that we can trade sideways today. Yes, that's right, trade sideways. I don't think we're going to quite fall below them and really get that screaming sell side sentiment. Reason being here, well, we have most of our indications pointing higher, but we're going to get to that in a minute. All right, so we talked about risk-on, risk-off sentiment. Definitely risk-on today. As I mentioned, dollar trading lower. We're down by about, at least here, let's see on this dollar index up on the board here. We're down, yeah, at least 20 points or so on the dollar, or up 20 points or so in the euro here. Dollar trading below, well, was trading below 81, 82. Now we're at 82 even, basically. I got 82 evens printing at the moment, so we are having a risk-on sentiment. Again, so dollar finally makes a little bit of support down there, 81.96 half. So we find a little support on the dollar. Now we can see us reverse. Now let's talk about here multiple market divergence. Now we see your crude, RBOB, heating oil, they all trade in the same pit. The markets are all trading lower today. Have a little bit of a sideways and lower sentiment to the day right now. Looking at crude printing right now 95.84s. RBOB trading 282.64. Heating oil, $2.90.59. So we're all lower by about a penny to a dollar today across the board. $1 in crude almost, penny in RBOB, penny in heating oil. Look at Brent crude. Brent crude holding levels below 104. 103.5 is that first good level of support that we've been keeping an eye on. The Brent WTI spread now, this is the one thing that's keeping me kind of not such a bear here. That Brent WTI spread very, very tight this morning and trading into almost the $7 handle now. We're $7.73. Again, we were very tight earlier on, basically sitting around unchanged now. 7.75 is now trading on that Brent WTI spread. Big indication here that that spread is tightening up again. That spread came in from a whopping $9 and $8 from yesterday, so now we're coming in just a bit on the spread. Calendar spread's also looking kind of sideways and tight. I have unchanged readings on the June-July, which is 21 cents. I got June to Augie, 15 cents unchanged. And I'm also taking a look at the June to Sep, which is actually unchanged as well at 15. So there we go, the sideways sentiment that we've been looking at all day here. Let's also talk about the crack values. 90, 16.53, starting to now decrease on the crack values just a bit again as it trades in the 90 handle. That equivalates for crude to trade to the 96 handle. As we move on down into the 89 handle, that will make crude trade in the 95 handle. So you can see crude making its the crack value starting to make its way down to the 89 even. Again, we're only about 16 points away, so that's nothing huge or significant. As you can see now, we're looking at volatility. Ladies and gentlemen, here, vol just kind of annihilated yesterday. I mean, we lost about 4 vols in the front, 5 in the back. We lost about $3 on the OVX, and now we're looking at this morning here volatility on the levels. I don't know if JJ has it up or not. You can see right now volatility about 22%. So right now we're continuing to see here this volatility starting to come in. Again, it was 21% just about 2 minutes ago. 21% just about 2 minutes ago, and now we pop up to 22% implied volatility. So vol is starting to rise. Now there's higher volatility in the lower strike levels below us. Once again, we have higher volatility in the lower strike levels. So if vol keeps on catching a bid, dollar catches a bid with it, we can see crude start to fade off those highs. So I believe we're going to be fading the news today. Again, anything below the 95.5 will be bearish. If not, we'll be trading sideways. It's a pretty simple formula today. With your news coming out today at 8:30, I have 8:30 a jobless claims, 10 o'clock wholesale inventories, and then at 10:30 I have also your EIA natty gas report. So we'll get to that in a minute. Now we're talking about volatility. We talked about here also our news here. We're also going to talk about the fact that Delta is pretty low in the market today. I don't have a lot of Delta in the market. We're about 40% right now. Again, Delta is the indication of whether they're buying the idea of movement or not, so not a lot of movement associated with trade at the moment. All right, so we're working down our list here, ladies and gentlemen, working down our list here as we are now continuing to see what's happening in this crude. All right, let's talk levels here. Let's talk here about our levels. Talking first and foremost, crude 95, 96 is trading, and now again we are just kind of, like I mentioned, just fading off those highs, trading sideways unless we get that open below with the levels that we're talking about. Implied volatility, as I mentioned, 22% this morning here. Vol index trades 22.25. Open interest currently stands 221,375. That's 221,375. Believe it or not, that's about 20,000 contracts lower from yesterday's. So that is kind of bullish, though, along with that Brent WTI spread, giving us a bullish indication this morning as well. RBOB gasoline trading 283.5. Open interest currently stands 89,340. That's about 2,000 contracts lower. Implied volatility just about 21%. And heating oil, your last but not least market here, we have it trading at 290.75. Volatility ticks lower, believe it or not, to about 17.5%. Open interest 90,973. So all of our open interest levels are lower. That is quite bullish here. So again, we will keep an eye on that here this morning. Let's talk levels now, ladies and gentlemen. As you can see here, levels are up on the board here. Now let's talk about here our high from yesterday, 96.77 in the pit session. Your low, 95.72, which we are trying to kind of trade near. Once again, it's 95.72, your low. We end up closing and settling the day up at 96.60 here, right near our high prints of the day. Today I have a daily pivot for you at 96.36. Once again, that's 96.36, your daily pivot. We had about a $1.05 range yesterday and a net change of just about 80 cents higher. I have some levels of support and resistance above and below here. Starting them off with some resistance above, I got 97 even, 97.41, and 98.46. Again, that's going to be our overall highs. All right, guys, support down below, ladies and gentlemen, 95.95, 95.31, and 94.26. So those are our levels that we're looking at from the trading floor. In the pit, we saw big trades yesterday around the 96 to 97 call. Believe it or not, guys, the 96 and 97 call were traded about over 2,500 times each call. Again, that's 96 to 97 calls, both trading higher, about 2,500 lots each. Believe it or not, we also saw the June 100 call as well come into play a little bit. They traded over 3,600 times, believe it or not. So they shore up a little bit of a higher profit target. They shore up some risk to the upside. Now, on the put side here, we saw a little bit more activity in the calls, believe it or not, than puts. But in the puts now, they start to work in that 95 put, believe it or not. So the 95 put, they buy that one about 2,000 times. They buy the 90 even put about 2,000 times as well. Believe it or not, we're also talking about the fact that we see the 98 put as well 2,000 times. All these strike levels, like I mentioned, just trade 2,000 times. So we're seeing them play both sides. We're seeing them start to sell the 95 level, and we're seeing a realistic fade of the new. So again, if we get below this 95 half, 95 even, we'll trade lower, back down, basically to the lower range. If we can hold these $95 level, we can see us trade back up sideways or up towards the high of our range if there's anything huge or potentially market moving. So there is going to be a huge market moving piece of data, but that's going to be in the natural gas today. Again, we have inventory levels on natural gas coming out today. We're looking for 80 BCF this morning. We're looking for 80 BCF. That's billion cubic feet of natural gas. Now, if we get anything above the 80 BCF, we will be bearish. If we get anything below the 80 BCF or any type of negative draw, we will be bullish. So it's as simple as that. That's how we play the natural gas inventory number, and that's how the market will react to that number. So right now we find ourselves on the natural gas kind of trading in our lower end of our range. Again, we break and we hold that 393 level, which was a very important level of support that we were talking about. We break below the 393s, we can trade all the way down to 386, and after that we have the 360s as a nice target. Anything above the 407 level will be trading up about 50% retraced up to the 420 level. So again, it's pretty simple here. If we get that draw on inventories or a little bit of a lesser than expected build, we can see very simply put it here above 410 and 420s here if we can get that draw or any type of number below 80. So let's now talk about levels here. Pit session high from yesterday, 398.90. Your pit session low, 393.70. At 393 level of support, as I mentioned, held. We close and settle the day in the middle of a range, 397.70. We have a net change of about 2 cents higher, about a 5 cent range, which is very small. Volatility sat at around 33% about. We can say vol index and volatility, implied volatility, sit at about 33%. Once again, open interest currently stands 185,038. Again, that's 185,038 with the resistance up above at 399.90, 402 even, and 407.20. I got some support down below, ladies and gentlemen, here, 394.70, 391.60, and 386 half, or 40. So you can see that 386 is going to be that level of support and that level to the downside we're going to be keeping an eye on here. So in the pit yesterday, we saw some decent trading. Believe it or not, we saw a lot of interest up at that 425 level, believe it or not. 425 calls. They dominate the pit. They trade over 5,000 times to the upside. But again, that's just assuring up that risk to the upside. Downside, we saw the $4 put and the 390 put trade over 5,000 times. So we saw a lot of interest here also to the downside. So again, they cover both sides. They play both ends of the market. It really comes down to this inventory number and whether we get a draw or a build in inventories. Well, that's about it, guys. Again, we're looking at this sideways type sentiment here in the crude today. Natural gas, judging on the inventory number, that will be our sentiment today. And we have our game plan to attack in play for the natural gas and for your crude again. So that's about it. I'm going to throw it back over to JJ here now to close us out. We're going to get ready to rock and roll again. I'll see you guys in just about 40 minutes or so here for our pit session, pre-pit session commentary.
As always, Marty, thank you so much. Thank you very much. Great analysis. Once again, that was Marty Errico from Traders Audio. He's down the NYMEX exchange. My name is Joseph James. I'm from School of Trade, and I'm here in my office in Los Angeles. Money Penny, I got a question from you regarding my double top strategy. And I wanted to describe to you real quickly here, just before we wrap this up here, how a double top, in my humble opinion, works. And I wanted to make sure before I let you guys go here, just real quick, a follow-up to my comment earlier on the double top, double bottom strategy. I always try to encourage all of our students in our community to understand the human beings behind the candlesticks. And we talk about this all the time in, day trading 101, but I don't think a lot of people really take this to heart. There are reasons that prices move. We don't operate in a vacuum. Supply and demand, human emotions are consistent throughout the entire process. I want you to think about what's happening on a double top. And I'll tell you why I believe a double top is a trending pattern. First of all, let's use the analogy of, let's say that Marty and I, we just got a new office, and there's a wall that divides two offices, and Marty and I decide that it'd be nice to break down that wall, right? So here we are now. Marty and I take out our sledgehammer, right? We got our mask on, and we're going to go at this wall, right? So we decide we're going to take down this wall that separates two offices in our two offices in our new office building. And so, of course, I go at it, right? So JJ comes out and he says, "All right, I can handle this wall. I'll take this thing down." Where'd this go here? Right? So JJ heads over and he says, "Bam! I'm going to try to knock the wall down." What happens is, right? I get a sore shoulder. I got a broken sledgehammer. Right? Bottom line is, wall doesn't budge. So I back off. I grab Marty. I say, "Hey, Marty, get off your rear end. Come help me knock this wall down." And he comes in and he brings in a sledgehammer. Right? He brings in his own muscle. And Marty comes out and he says, "All right, ready, Joe? 1, 2, 3, bam. Let's hit this wall again." Nothing happens. Right? We break through a little bit. Maybe the sheetrock is damaged a little bit, right? Maybe some structural. Maybe I can see through the other end, right? Maybe I punched a hole in it, but it's definitely not down. So now what do I do? Well, now Marty and I lick our wounds, right? We go back to the drawing table. We back way off. We call the structural engineer. We call some more friends. We call the building crew, and we call in a backhoe, right? A bulldozer, okay? Now there's 10 of us. You ain't going to stop us now, wall. And what do? We blow right through that wall, right? So that, in my humble opinion, that is the logic behind, now flip this around, right? Now this could easily be a double top, right? A double bottom. So now think of it this way. Instead of that wall separating two offices, now it's a wall of resistance. Now, it's the buyers. I'm bullish. I represent a major airline, right? Or I represent somebody who has an incentive in prices rising or falling, right? I'm going to now test that resistance, okay? I try. The resistance now holds. It backs off. All right, well, let's retool. Let's grab some more buyers, and let's try it again. One more time. Again, this time around, I poked a hole through it, but it's definitely not broken. This time, those buyers are defeated. They're going to have to retreat. They're going to have to gather some more momentum here. That's the key. They're going to need to find more support. They're going to need to get lower. They're going to need to retool. This time around, I'll be darned if you're going to stand in my way now, resistance, bam. And that's exactly what we look for. My strategy using double tops says that a double top should be a trending pattern, which means I'm always going to take some profit off right back at that top. And I'm going to try to hold on to this thing, usually for an extension, right, of an ABCD. So just a little bit of a taste of what that double top, double bottom strategy looks like. Money Penny, as always, love the questions. And as always, guys, I appreciate you guys coming in and joining us today. Love the questions. I answer questions like this all day, every day while we're trading and teaching in our live trade room. Come out and join me anytime. Marty, thank you so much for joining us here today from the trading floor. Thank you to the whole team over there at Traders Audio. You guys do a great job. I'm excited to log into the broadcast again today. As always, I'm JJ at School of Trade. That was Marty at Traders Audio, 7:30 a.m. Eastern Time, Monday through Friday. We'll catch you guys here tomorrow for a finally Friday version of the Crude Oil Prep. We're going from the screen to the floor here this morning. Have a wonderful day out there. Don't forget to look for those fake out breakouts, and we're only 25 minutes away from those jobless claims. It's going to be another exciting day. Remember, guys, you got to learn it so you can earn it. We'll catch you next time. Adios, amigos. Bye-bye for now.